I'm here today with Jan Kleczkowski, Chartered Accountant, an Audit Senior at EY. And I thought we'd have a conversation about accounting and what it is and what he has learned during his journey.
Yeah.
So Jan, thank you very much.
Happy to be here, thank you.
What is accounting?
What is accounting? Big question. Accounting is broadly concerned with ensuring that business owners and other interested parties have access to the right information about their company and accurate information about their company. So how much money we've made, how much cash we have, how much other people owe us, how much we owe other people. So it's about making sure that they have that information so they can make good business decisions with it. And it's also concerned with helping them make those decisions. So there's a backward-looking side where you make sure that everything's been recorded correctly, and then there's a forward-looking side where you take that information and you help business owners do something with it, analyze it, move forward.
What might be an example of a forward-looking approach or piece of advice?
So if a business is considering a particular investment, so maybe it's thinking about opening a new factory or building a new oil rig or buying a new piece of machinery, then accountants can help with estimating future profits, future cash flows, with figuring out what sort of funding is needed, with understanding whether or not it's actually profitable. Because sometimes these things look profitable, but if you actually work it out, they're not.
Interesting.
So that's quite a simple example, I guess. There's things like building budgets, for example, which is...
I hadn't thought about that before, that before for an oil rig, that would be the very first step.
Yes, you have to, because they will have money coming in from the oil rig over the space of the next 10 years.
Yes.
And you need to set up bank loans, for example, that will last those 10 years. Because if you default on a bank loan, then it's not good. Yeah.
Before I keep going, okay, if an oil company or a company defaults on a bank loan, what exactly happens?
So, worst case scenario, it will basically be breaching its loan covenant.
Okay.
And in a lot of cases, what that means is that automatically all its other loan covenants are also breached. So every single loan that it has, banks will try and recover it.
Oh.
Because if you start defaulting on loans, it means you're in a bad place. So it's obviously very important that that doesn't happen, and I'm sure there's legal structures that you can set up to sort of mitigate that. But if a bank sees you defaulting on a loan to another bank, it panics.
I see.
Yeah. So...
Well, that's worse than I thought.
Yes. No, it's very bad. It's very bad.
Interesting. Okay, so what is accounting? That's the view, the backwards view and the forwards view of the business in terms of money and assets.
Yeah.
When did accounting start?
So I guess in some sense accounting started when people started writing down their bartering or currency transactions. So this is very, very old, like ancient Mesopotamian cultures. Then at some point, double entry bookkeeping developed in India, and then it was first formally described in 1494. And sort of with the rise of the Venetian banks, it became more and more important because they had to, not only did they have lots of subsidiaries that they had to keep track of and make sure that everything sort of agreed, but also they were dealing with lots of different currencies, many more currencies than we usually deal with today. So that was very important. Accounting became sort of standardized as a profession in the mid-1800s. Okay. You had the first chartership body in Scotland, 1854, and then that sort of coincided with the rise of the Industrial Revolution.
I see.
Yeah.
So before that, who would do accounts? Just anyone, or
Yeah, you would have had clerks and bookkeepers, I guess. But yeah, those would have been also one of the reasons for setting up accountancy chartership bodies was to distinguish them from lawyers. And say we need to have some skills that lawyers do, because we're called to testify in court on legal matters, for example. But we also have separate skills that are important to recognize separately. So there would have been a lot of clerks, bookkeepers, people like that doing it.
So the distinctions were just less clear, and then became.
I think so.
Yeah.
Yeah. That's my impression.
A question that a lot of people have, because I keep having it and keep having to remind myself, what is the difference between accounting and bookkeeping?
Yes. So bookkeeping is basically concerned with the recording of information. So we have a business running, it makes money, it has expenses, it has debtors, so people who owe me money, creditors, people who I owe money. And bookkeeping is concerned with making sure that that's all written down correctly, that it's classified correctly, the two entries in double entry bookkeeping are done in the right boxes and the right accounts. It's a very, very necessary sort of first step for all financial information. Whereas accounting or accountancy is concerned much more broadly with bookkeeping, sort of falls under it.
Okay.
But then there's lots of other things it does. So it does like analysis of investments, for example. It looks forward, it does budgeting, it does business advice, it does audit, it does forensic accounting, insolvency practice. All of these fall under accountancy, but they're not bookkeeping.
So all the things you mentioned, what might be a day-to-day example of accounting that is not bookkeeping, but it's also not something extreme like insolvency?
Yes, yeah. So I think audit might be a good example.
Okay.
So that's what I do. So my job is basically to go into a company, see what they've written down, see what they're saying that they have made, their expenses, their revenue, and check to make sure that it's everything that they've written down actually exists. So what I'll do is I will look at the list of revenue, I will take a statistical sample, a random sample of those transactions, and I will ask for evidence like invoices, bank statements for those transactions. That's a very important part. Also that the numbers are recorded accurately. Then there's things like if I have lists of people who I owe money, like vendors and banks, make sure that that list is complete. There's nothing missing from that list. Again, very important. I will then make sure that everything's been classified correctly. So there's different types of revenue, making sure that that's done well. In more complicated business models like insurance, for example, there will be a lot of actuarial work. So they will have to know, okay, we've sold so and so many life policies, how long do we expect those people to live? And I know, it's very important though, because you have to write that down as a liability.
Yes.
Or life insurance or pensions, how long will I have to keep paying those people for? Because the longer those people live, the more money I'll have to pay. So I have to sort of estimate how long those people are going to live, and that we as auditors, we then bring in our actuarial specialists to help with that. But yeah, that's one of the things we have to check, because it's a number on their financial statements.
I get it.
Yeah.
I mean, I've heard that you can't put a price on human life.
No, you can't, but you can put a price on how much you're going to have to pay them in pensions. Yeah. So, at the risk of sounding extremely cold, Yes, it's yeah. If you take a step back, it can be a bit grim. Yeah.
The human being as an accounting entry.
Well, if you think about it, if you do it wrong,
then
you're going to run out of cash, and all those
know.
people are not going to get their pensions.
I know.
Yeah, but no,
It's
I
still
get it.
funny.
Yeah.
Okay, so what might be an example of a problem that you would encounter in the work of auditing that what might be a typical problem and how would you solve it? And I don't just mean doing the records or checking the records. I mean, there's an actual problem and a solution must be found.
Right. So I guess there's a couple of different types of problems. One of them is you're dealing, in some sense, you're dealing with a client that doesn't want you there.
Oh, okay.
Because nobody likes being audited, right? And the members of the finance team will often recognize that this is necessary, this is good, this is just part of the job, very helpful. But at the end of the day, there's little value for those people directly in what
Yes.
you're doing. And you're also asking them all the hard questions. And it's, again, I want to stress that there's a lot of people who you audit who are happy to see you there. It's part of the job. They are super helpful. But then you will also run into people who aren't.
Yeah.
And so, especially if we go back to the revenue sample example, if you have a lot of revenue coming in, then sometimes that statistical sample will be very large.
Okay.
So I might go to an accountant at the client and say, see these 25 transactions. Can you draw me invoices and bank statements for every single one? And then I'll come back next week and say, well, actually, we have problems with 5 of them. Can you track them down for me? So they're not necessarily going to be very happy about that.
No.
So there's the sort of client management side and human aspect of it.
That's interesting.
There's things like then there's like more accounting or auditing specific problems. So if you look at famous auditing scandals, you will see some of them fell because the auditors, well, they fell because the company weren't doing things right, but the auditors often should have caught it.
What example might you give of problems that occur in accounting which don't come under the normal set of expected problems, and there's something you have to find a solution to?
Right, okay. I guess expected problem.
I mean, so I assume that there's a sort of day-to-day work of doing the quality checks on the transactions and the finding the invoices and making sure everything's classified correctly. Mm-hmm. What happens if something falls outside of that somehow?
Right. So one thing that we do, and I'm not sure if that's what you mean, but is companies will have a large number of different bank accounts that they use for various purposes, and cash is always a high risk area in audit. So what we do is we will get a permission letter from the client, then we will go to the bank directly and say, for these list of accounts, can you confirm the balances? It's very important that we get it directly from the bank, not through the client. Yes. And so that sometimes it agrees with the client records and sometimes it doesn't. And if it doesn't, it could mean fraud, but not necessarily. It could mean a mistake, an error, some sort of other unintentional discrepancy, I guess.
If you find evidence of fraud, are you legally obligated to report it to the government?
So if we find... Yes, I mean, we definitely have to include it in our audit report. We will raise it with the company executives. And then I'm trying to think like what the exact procedures are, but to answer your question, yes, definitely. We can't just tell them, oh, there's fraud, and then just trust them to deal with it.
No, I'm asking myself if there's something like lawyer-client confidentiality.
No. In fact, if we suspect money laundering, we're not allowed to tell the client that we suspect them of money laundering. That's very important. I think it's known as tipping off, and I think it's a criminal offence to tip off.
Okay.
So if I'm auditing you and I suspect you're money laundering, I can't tell you. I need to report it directly.
Okay.
Yeah. Because then otherwise you're going to try and cover it up.
Yeah, I see. Okay. We talked a little earlier about accounting practices and how to set them up and what they do. So what are the kinds of mistakes that small businesses would typically make with accounting? What are the problems that you might run into with a small business?
With a small business.
Small to medium.
Yeah. So I have to say I've not directly worked with many small businesses, but I think there would be problems with misclassification of things. So perhaps some of it gets a bit technical, like what are your long-term liabilities or short-term ones. Sometimes things should be recorded as there's different, if you spend money on something, if it's something permanent, so it's capital expense, or if it's part of your operations, then that's just a regular expense. It's a technical term for it. So sometimes it gets a little bit muddy as to what is what. Say you're improving something or you're maintaining it. That's different. So there's things like that. Then there will obviously be issues with not writing things down correctly for the tax man. So that would actually be a good example, because they're treated differently for the purpose of tax depending on what kind of expense it is. So there are some things that are sort of down in the details. If a business wants more like forward-looking business advice, then sometimes they will, make investments that aren't profitable, or they will continue with a line of business that is losing them money.
Okay.
So you have issues like that. Then you have issues like they won't be paying. They won't have an organized way of paying their suppliers. So which just muddles everything.
Okay.
Yeah.
Interesting. What has been something striking that you have seen in what you're doing? Audit. Does anything come to mind?
Something striking.
Something that jumped out at you, like, oh, that's interesting.
Yeah.
That wasn't in my textbooks.
Yeah. I think there were things that were in the textbooks, but you don't necessarily expect to see.
Okay.
So like IT systems that are not great. I'm not going to say much more, maybe. There are some things that you look at and be like, that could be in an exam question. Then I guess one thing that I didn't expect in audit necessarily before I started was certain important documents, how many levels of review they have.
Oh, okay.
So when we're doing an audit, we're preparing a list of files and documents that we're recording our work in, and that then forms sort of evidence of what we've done. Some of these are reviewed by 6 or 7 layers of people, sort of climbing up the layers. Every layer will have reviewed the document and left comments for the level below to address, and then it goes up, and then it goes up another level. Some of it is unbelievable, but not just in audit, but generally in all financial documents, there's an important principle of a preparer and a reviewer, which I would not have thought of before. So when I receive a workbook from a client that say they have a calculation where they're estimating some things, what I always expect to see is the name of the person who prepared it and then the name of the person who reviewed it. It's not enough to just have one person.
Interesting.
And sometimes there's more levels. But yeah, I think before I started, it's not something I would have expected. Because, yeah, I think naturally, it's quite natural to think, oh, I've prepared this, I'm an accountant, I know what I'm doing. Yeah, if you need to check it, it kind of means that you're expecting to find errors. Yeah. But that's not. First of all, that's not necessarily the case. Secondly, you kind of get used to the fact that everyone's kind of expecting errors, because the devil is so much in the details that there will be errors, there will be mistakes, there will be things that could be improved always. And I guess I hadn't really expected that. Yeah, you get used to it; it's fine. But yeah, you don't expect it. And then you feel very good once you get to the level where you're the one doing the reviews. Yeah. And then you're like, fix this, and then you send it off. Yeah.
It's all worth it.
Yes.
I'd like to touch on one more topic, and then we can wrap, which is blockchain and the emergence of cryptocurrencies. And I think I can tie this back to, you described the emergence of double entry bookkeeping in Europe with Venice and its needs to manage many currencies. And so that strikes me as somewhat similar.
Yeah.
Have you yet seen cryptocurrencies in your work?
Not directly, but there is formal guidance on how to audit cryptocurrencies. So I just happen to not have worked with them directly, but it's definitely like a present reality and as something that needs to be audited. There are specific risks that are associated with it. I can't tell you an awful lot more. I don't have much experience, but it's definitely a reality in terms of cryptocurrencies. In terms of blockchain, there is accountants in general, and perhaps auditors in particular, tend to be very conservatively minded people and very cautious people, and often with good reason. And it takes a long time often for new software and technologies to be adopted by audit companies. And sometimes in cases where it doesn't take a long time, my personal opinion is that it should take longer. Like I've seen specific instances of adoption where I think it's not been, the implications of this have not been thoroughly discussed.
Oh, I see.
And yes, before we can trust the output of anything, we have to test it to the nth degree, because that's kind of what we do. So I guess with the adoption more generally of blockchain, there is potential there, but a lot of accountants will be a bit skeptical to take it on. Because if things do go wrong, then the entire organization is at risk.
Oh, I assume you mean then using blockchain as a tool internally for tracking things.
Yes, yeah.
So, just off the top of your head, and from what you've been hearing in the field, what are the flashpoints with cryptocurrencies in terms of businesses and accounting? Like, have you heard any examples of businesses taking in crypto payments and how they deal with it in an accounting sense?
Actually, not so much specifically. I think although there are businesses that deal with cryptocurrencies, they tend to be in the minority still. And I think a very small minority. And so, because there's nothing in my work that sort of selects for those businesses, then I've not actually run into it, nor do I personally know anyone
Interesting.
who's worked with it.
Yeah.
Or that I know that they've worked with it. Yeah.
Perhaps. I guess it might be fair to call crypto still the Wild West, and much like the Wild West, it takes a while for the accountants to turn up.
Yes. Yes, I think so.
Which is reasonable.
Yeah. There's also a measure to which accountants are fairly risk averse, and crypto carries risk naturally, you know. And if you're gonna use it as a store of value, then it's difficult to say what it will be worth 6 months from now.
Yes.
Yeah. So it's a risky asset that you're holding, and so we're not risk averse to the point where we don't want to deal with any risk at all.
Right.
So we work with like risk management. But I think there's a lot of accountants who will be like, let's not do that, or we'll be a bit more conservative, whereas the business leaders that they work with might be more willing to take risks, but you need the accountant to sort of hold you back a bit. Yeah. Yes, yeah. So, I mean, you very much need both.
Yes.
But my impression often of accountants is, at least my personal experience, is that they will rather be the ones sort of holding back rather than pushing forward. Yeah. In spite of all rhetoric. Yeah.
I do have one more question which comes to mind, which is, how long have you been in accounting now?
Just over 4 years.
4 years.
Yeah.
So, I mean, it's a standard question, but it's always interesting. What might you tell yourself 4 years ago about that journey and what you've learned?
Ooh.
Things that just were completely not obvious that you couldn't have gotten from the books or the university or anything else.
I think the biggest ones would have been in terms of career growth. So it's a cliche, but put yourself out for opportunities. Because there's definitely cases where I've not done that, but there's a couple of important moments, even in my 4 years, where I have done that. And it may not have gotten picked up at that moment, but then, at least partly for that reason, I then got picked out and assigned a piece of work that was highly visible and was not only interesting, which is not always the case in audit, but was interesting, it was visible to audit executives, and it really sort of propelled my skills and sort of made me even more visible. But I think the fact that because I said that I was interested in doing data analytics as part of the audit, and that was picked up, and then perhaps as a result of that, I was then assigned other work that was interesting. I don't know exactly what the causation there was, but it definitely didn't harm anything. In terms of accounting itself, I haven't thought about it that much. I think the amount of things that I've learned over those 4 years is so large that it's you almost feel like I'm definitely like professionally, I'm a completely different person from when I started. There's a lot of maybe how much you need people skills wouldn't have necessarily stood out so much. Yeah. Especially audit.
Yeah.
It's such a teamwork undertaking that you need to work well with your colleagues, but you also need to be able to work well with the client in sometimes difficult circumstances. Yeah.
Yeah.
So I guess there isn't like a single big lesson. But
It doesn't have to be. I think that's a good note to
Good.
call time on. Thank you
Thank you very much. Thank you.